Welcome back to the 50K Funded Challenge to Payout series. I was traveling this week and I didn't have my mic, but I was able to record my executions. So this is going to be a voiceover going over the thought process behind the trades I took this week. Let me know if you prefer this format or the other format in the comments below. Starting on the 15-minute chart and turning on the market session indicator, we had a sweep of the London high as well as this 15-minute high with sell-side liquidity right above the 15-minute BISI. We had that strong bullish move higher at 8:30, so I was looking for an 8:30 manipulation, 9:30 distribution play. The trade I took this day was that bearish move into that 15-minute BISI, which you'll see in the executions. So with that sweep of the London high and 15-minute high, with the 8:30 manipulation move higher, I was looking for the lower time frame to confirm that price wanted to move lower. Dropping to the 5-minute chart, we see that price pushed up after 9:30 but failed to take out that 8:30 high. So that move up was most likely price trying to take out sellers that entered before 9:30 and at 9:30, as well as possibly induce buyers. Once I saw this, I was interested in shorting into the pre-market lows and eventually into the Asia lows right before the 15-minute BISI. So that was the thought process behind the trade. Now we can move on to the execution. Once price took out sellers after 9:30 and closed back below and respected the first presented fair value gap, I was interested in going short. It was also in line with a 5-minute inversion fair value gap. Took 2 contracts out, taking my partial and leaving one in to run lower, but I closed out of the position because I didn't like that bullish momentum and I thought price could use that as an inversion for value gap, but I did re-enter once price reconfirmed that it wanted to move lower. I didn't want to see price come back above that 1-minute order block, and I liked that it respected it and closed back below that 1-minute SIBI. I moved my stop loss down to break even to protect my profits. Price hit my take profit, and that was up $400.50 this day. So this was definitely my worst day last week in terms of execution and P&L. The most I was willing to lose this day was $500 because Thursdays and Fridays tend to be good days for me, but I was definitely offside this day. I was short because we had a sweep of 15-minute highs and there were pre-market lows below for price to take. Price had also closed below this 15-minute BISI and respected it, so I saw it as an inversion fair value gap. I also like that it respected the first presented fair value gap on MNQ previously on top of closing below that 15-minute inversion fair value gap. You can see here that I re-entered once price respected the 1-minute order block and first presented fair value gap and pushed lower. I increased my risk here, which I shouldn't have done, especially after taking that initial loss. If anything, I should have reduced my risk, but convinced myself that that was a move to take out sellers before moving lower. Once price pushed higher and formed SMT with MES, which I'll mark out in a second, I re-entered with similar logic that that was the move to take out sellers before moving lower. Price did end up moving lower, which you'll see in a bit, but it did not come for those pre-market lows that I had marked. We see price pushing lower here below the first presented fair value gap and below the 15-minute BISI. I took a partial out once I saw that strong bearish momentum and wanted to leave a runner into the pre-market lows. So another contract once price closed below the 15-minute BISI. I shouldn't have done that. I should have waited for price to reconfirm that it wanted to move lower. By respecting it as an inversion fair value gap, that would have been valid confirmation to add to the position. Yeah, but I ended at a loss of $535.60. Moving on to Friday's trade, there was higher time frame bearish SMT between MNQ and MES. We had also swept the 15-minute high here, the pre-market highs, and formed bearish SMT at the 9:30 open. So I was interested in going short. The 9:30 bearish SMT also formed at a 15-minute order block and SIBI. I didn't enter right away. I entered once price formed this lower time frame SMT at the 15-minute inversion fair value gap, and my target was the liquidity right before the 15-minute BISI, which you can see here as I zoom out. I entered another trade. This time I was bullish because price had reacted to that 15-minute BISI, which was also a 1-hour BISI, and formed SMT after sweeping 15-minute liquidity. So I wanted to see a move back into equilibrium of the range or into those higher time frame POIs up there, but I ended up closing out once price hit that 1-minute order block. Price was pretty bearish overall, so I didn't want to hold on to the position. Overall, I was up $278.40 this day. The balance on the account was $51,844.40 at the end of the week. And this is why risk management and execution are so important. If I had managed my risk better on Thursday and just stopped closing in and out of trades emotionally, honestly, the results could have looked very different. These are things I'm still working on and trying to overcome. But yeah, if you enjoyed this video, please like, comment, and subscribe, and I'll see you in the next one.